The Dow Jones Industrial Average just hit 30K for the first time since its inception in 1896. After a long rally, the Dow surged to this milestone as investors cheered breakthroughs in 3 separate COVID-19 vaccines, offering hope the economy may soon get back to normal. It also followed Democrat Joe Biden's victory in the presidential election and the General Services Administration clearing the way for the president-elect's transition process, easing investors' concerns about a drawn-out period of uncertainty. This latest stock market rise was driven by stimulus programs from the Fed and leadership from tech stocks.
The speed of the climb from 20,000 to 30,000 has still been astounding despite what we saw earlier in the year, which was a huge sell-off in February and March. It took about 18 years for the Dow to get from 10,000 to 20,000, and it's been less than 4 years for the Dow to climb from 20,000 to 30,000.
The new high comes around 9 months after the Dow plummeted from investors fearing the economic impacts of the coronavirus. During this period of historic volatility, on several occasions the Dow fell more than 3% in a single day. After reaching its February 12th peak, the blue chip index fell nearly 40% in just 6 weeks, hitting its lowest closing level since 2016. When it comes to the Dow, milestones like 30,000 serve as an indicator of how well shares of a select group of large technology companies have done. And in that regard, the biggest contributor to the Dow's rally, Apple, underscores the influence of the tech sector on the global economy during the pandemic. More on the Dow's other leaders and laggards in a moment. But first, let's take a look at how the index works.
The Dow looks a lot different today than it did in 1896 when it was first created with 12 smokestack companies. So these were companies like Tennessee Coal and Iron, General Electric, that were old economy companies. Today, the index has 30 stocks that are weighted by stock price, and we've seen tech companies like Apple and Microsoft, and more recently, Salesforce really have a big influence.
Editors at the Wall Street Journal help select the 30 companies that make up the Dow. Those stocks are generally seen by investors as the pillars of the stock market. When it comes to the Dow, the more expensive the stock, the more pull a company has. So a 2% stock price gain by United Health would add more points to the Dow than, say, a 2% gain by Cisco. Its stock price is a fraction of United Health's.
Other stock indexes like the S&P 500 are very different from the Dow because they weight companies by market capitalization. So companies with the biggest market values like Apple will have a much bigger influence on the S&P 500 than they do on the Dow.
That means just a handful of stocks have driven up the value of the Dow over the last few years. Take Boeing, for example. Before 2 deadly crashes, the grounding of the 737 MAX fleet, and the pandemic, the aerospace company was driving the Dow's gains. More recently, tech companies like Apple and Microsoft have taken the baton from Boeing and overshadowed the declines in shares of former market leaders ExxonMobil, IBM, and GE. While recently the coronavirus crisis has been a driving factor in the success of certain companies and the travails of others, political factors have long played a critical role in moving markets.
The wealthy are paying a fair share of taxes, even as the stock market shatters records.
Our stock market has reached an all-time high today.
2017 was a pretty good year for the stock market. The world's major economies were growing in sync, corporate profits were rising, and the Dow continued to steadily climb higher. In November, the release of the GOP's tax cut plan would have a direct impact on those 30 companies that make up the Dow.
With this plan, we are making pro-growth reforms so that, yes, America can compete with the rest of the world.
Investors considered the tax cuts good for big business.
The Dow is moved day to day by the same factors that influence the broader stock market. These could be economic indicators, political questions, or recently momentum signals.
2018 was full of uncertainty. There were trade tensions with China that threatened globalized businesses' bottom line.
In particular with China, we're going to be doing a Section 301 trade action. It could be about $60 billion, but that's really just a fraction of what we're talking about.
And President Trump criticized the Federal Reserve for a dip in the markets.
I think the Fed has gone crazy.
In 2019, the Fed cut interest rates for the first time since the financial crisis. not just once, but 3 times.
Today, we decided to lower the interest rates for the 3rd time this year.
Other central banks around the world took actions to stabilize their economies as well. And towards the end of 2019, some progress was made after months of trade talks between the US and China. President Trump agreed to a limited deal with Beijing, dropping threatened tariffs as China agreed to purchase more goods from the US. By January of 2020, the president had signed the first phase of a trade agreement. And the Dow, in the early months of the year, with GDP and unemployment numbers strong, continued its steady march toward 30K. In mid-February, amidst the profound economic uncertainties of a global pandemic and the widespread shutdowns in March, the Dow, like all major world indices, witnessed a historic sell-off. But then, from early April onward, investors found hope in multi-trillion-dollar federal relief packages, the Federal Reserve's aggressive stimulus programs, and growing optimism that a vaccine is on the way. In addition to Apple, shares of Microsoft, Amazon, Google parent Alphabet, and Facebook have soared as the pandemic and trends like remote working and learning bolster consumers' reliance on new technology. For the S&P 500 and the tech-laden Nasdaq, these companies have more than compensated for the declines in economically sensitive sectors like energy. While many analysts are wary of a reversal following such a strong rally, investors say the fundamental drivers of the run are still intact, particularly for tech companies, whose growth is even more appealing in a world with ultra-low interest rates.
Who knows where stocks will go from here? The coronavirus has really introduced a whole new level of uncertainty in both directions. Investors have really been staggered by how quickly stocks fell earlier in the year and how quickly they've since recovered and how fast the Dow is now at 30K. So who knows? Each 10,000 points gets easier, so 40K might not be out of the question.